Welcome to Java. It's March 5th, 2025. It is also Wednesday. Thank you all kindly for joining me again. It is Discord Day, so we're going to have open discussions. In that group, it's about 5 o'clock p.m. Eastern Time after Greg's live ends. So join us in that group. If you need a link, please tell me in the comments or email me directly. It is in the links below. There's quite a bit going on this morning. Massive volatility happening the past couple of days. If you're trading in the markets, you know these things. So let's get right into this. We've got a lot of details to speak about prior to the market open. Now, in fear territory, in fact, we are in extreme fear territory on the fear greed meter this morning. We don't have the MMRI. Greg is still working on that. However, we do have the two main elements. Now, looking at the 10-year yield at 4.237 at the moment. Now, this is pulled back much from the 5% level that we speak about. So this should be giving room for the markets, but instead we're still watching some massive volatility, but they have had quite a run up. So this is all under the tariff talks for the most part and fears of inflation. We've got the relative strength of the dollar down to just above 105 again. We were hitting 109 there for a while. So with a weaker dollar, this also normally will give a boost to the United States markets. But we've got a couple of other elements in here. Namely, one is the German and European market as well. We'll speak about that in a minute. But what we're looking at currently is the stocks to open. They're looking weak still from yesterday, although we are looking at a bit of a recovery, if even slightly for now. Now, I don't urge catching falling knives. Wait for them to set some levels. Have your levels ahead of time prior to buying this particular dip. I think a little longer term, this might be a short-term recovery, but in the longer term, there's still more weakness in here. So we'll see what happens. So daily driver right now going back over here is blood. A couple of minutes from now, from me doing this, but I can't hold off. I want to get this out to you. We do have United States Commerce Secretary Lutnick coming out, and he can announce a trade deal today with Mexico and Canada after the imposing of some pretty tight tariffs. Now, this has kind of upset both Canada and Mexico. Now, a quick word about these tariffs is it looks to be that the way that they have been upheld these past couple of days, they're being used much more as a negotiating tool rather than as a hardline play to actually put these tariffs on the goods. What does that mean? That means in the short term, there is going to be some pain, but in the longer term, I expect these will be eased up. And as they do, things will recover quite a bit. So this is just a shift to rebalance, as he has said he would use these as the trade, but also mostly negotiating tool to kind of get things back under and put others kind of on their knees, if you will, particularly Ukraine. We'll talk about that. So today we're looking at ADP payrolls, Fed beige book, and more deficit spending to continue, not just the United States, but in Europe as well. We've got cryptocurrencies heading into that $90,000 to $92,000 has become resistance. We'll see if it can break through that. More cryptocurrency in the news as well. Now we've got this coming out, a really big bazooka. German defense spending likely to rise after parties agree, this is their new political parties, on a historic debt change. Now, Angela Merkel, when she was in office, kind of tightened the belt, so to speak, and said that they would not do a lot more debt spending or deficit, increasing their debt. So they have kind of reversed that policy, and we'll take a look at that in a bit. First, our calendar for this ADP factory orders, ISM, and the Fed beige book at 2 o'clock. Now, really, employment is what we're watching. So the large job numbers will come out Friday. But until then, these are the ones that could potentially move the markets this morning. Both prior to market is ADP employment as well as Commerce Secretary. Now, We've got an analyst saying that tariffs are a black cloud over the stock market. This is true, of course, over these fears, which is driving that, and also some spending. But I see this as a temporary, as far as that being the catalyst. But we've got Target warning about consumer spending, and it's another sign of stress on the real American economy. And this is from the consumer point of view, and not all of the reports that come out from these entities that kind of fix their numbers as they will. We've also got the housing market starting to show major cracks. Florida housing, probably at the top of that list, along with Austin. They're in trouble as prices are being cut in multiple cities. Now, keep in mind, this is after a massive run up. So, was due to have this happen, but this can affect very strongly the what we call the perceived wealth effect. So, as people see housing prices decline, even if it has nothing to do with them because they're not selling theirs, they're likely to tighten up in the fear that they won't have as much equity in the future as they had originally thought. Now, moving over to the deficit spending first, we've got something major that could affect the CHIPS. Now, the United States president is ending the CHIPS Act. And his reasoning is that the tariffs will take care of this. Now, by ending this CHIPS Act, these were billions of dollars that were going to be funneled into the sector. However, it is for the most part completed anyway. So this is just kind of a run on to this. So while it might affect them and affected NVIDIA a bit, it's really quite done on the other side of this. Now, I really want to show this chart right here. German borrowing costs jump on the debt break deal. What does this mean in short? They did have that deal to where they were not going to increase their debt. They just broke that. So what did it do? Broke all-time highs. Now, German 10 yields, we watched their debt as well. Their yields spiking. And this yield spike is going to cause an influx of money into German debt. If you can get 5% or more return on higher debt over in Germany over what you can get in the United States, it will shift that flow of capital. And it has the potential not just out of the debt market, but also equities. So we could see some weakness in the United States markets due to this. So urging caution on that. We've also got this is kind of an off, but the United States has cut off intelligence sharing with Ukraine. Now, this, I believe, is another side effect where they're using this in tandem with what has recently happened. They're shifting to a lot of defense spending, but this is kind of muscling, if you will, Ukraine and Zelensky into a deal with the United States. They will get their way. Trump was very upset with him as far as what happened with negotiations, and he's just showing force here in a different method. Now, over to trade, and you've very likely heard about this. We've got some port wars going on. I've been speaking about the Panama Canal, and yesterday I mentioned that BlackRock was doing a port deal to where they were purchasing some key Panama assets. This acquisition includes them purchasing controlling stake of over 43 ports across 23 countries that utilize the Panama Canal. So this is very important to the Panama Ports Company. And they are going to have this, as I said, controlling stake in the say for the Panama Canal. This has major implications for trade, and in my opinion, should be paid attention to almost as much as the tariff talks, because it's just as powerful. So we've got Trump also reportedly planning executive order to boost shipbuilding and counter China's maritime lead. Now, this is a very quiet story in the background, but the important part to take away from this is the admission that China has maritime dominance at the moment, and the dominance in a naval fleet is not something to kind of pass over lightly, because it is the strength of the military that backs a currency in order to make that currency dominant. Now, United States still has the reserve currency, but if they cannot maintain uh, military dominance, then this could very easily shift. So I want to bring that to your attention, because he is, and I believe that is a good expenditure of the money, is to maintain that military strength and to put it into the shipbuilding. That is actual production, and that actually will help not just the GDP, but also jobs growth. And it will push it into the private sector. Now, which companies will benefit from this? We'll look into that a little bit later. Now, we've got a little bit more shift, not just in the maritime, but in drones. So with this, the Air Force combat drones are getting a novel mission designation, F for fighters. They've got an entire fighter fleet now of drones. And one of the main companies, I'm going to mention this again, is Anduril. So Anduril being the main producer, they are looking at going public soon. So keep your eyes on that company going forward. Again, not financial advice. You have to think for yourself if you're here. I suspect you already do, so thank you for that. We've got another aspect to this, is that they are adding voice-controlled drones. So this could be a military game changer. They do have a test group right now that they are kind of putting this out on, and it's called the cartels. So they are utilizing these drones at a lot of measures against the cartels at this moment, and kind of fine tuning from there. So with this, let's move forward. We've got the Dallas Fed saying that bank stress is declining but still elevated. Now, looking at all of the banking issues that are going on, we've got more mergers and acquisitions that are going forward. As I've said before, there are still large numbers of banks that must go out of business, whether it is just simply going out of business or getting bought by others or merging together and becoming larger banks. Why is this? They are in the midst of a setup for cryptocurrencies to take over. Now we've got a cryptocurrency summit that is going on at the White House, and the major companies that are going are Coinbase, Chainlink, and Strategy, which was formerly MicroStrategy, and they're going to be attending this. Now, Chainlink is the main runner of blockchain, and Coinbase, I believe, is still, I've been saying this also for a long time, structured to be one of the main, if you will, banks bringing in cryptocurrencies. They are going to become the JP Morgan of cryptocurrency banks. So with this, we've also got, this is more of a European thing, but Tether USDT custody and transfers will not be restricted under their MiCA law. Now, what is this doing? This whole setup is, particularly in Europe, they're shoving out Bitcoin in particular and bringing in stable coins. The reason being, they can control these. They can also control the supply of these. So think about that. I wish you all a wonderful trading day, great trading day in general. If you are, just watch your levels. We will be hearing from Commerce Secretary in just a bit here. So until I see you again, my friends, and hopefully at Discord tonight, stay free.